Good morning, ladies and gentlemen. So it's Arizona Sonoran, and obviously we're developing the next copper mine in the U.S. for the energy transition. We do make some forward-looking statements, so I'll draw your attention to our cautionary language. So as everybody's aware, this is a Tier 1 asset. It's located in Arizona in the US of A. It'll be a solvent extraction, electrowinning, heap leach operation, so relatively low capital intensity when you see our pre-feasibility study coming out in the first quarter of next year. Since acquiring the project in late 2020, we've grown the resource from 224 million pounds of copper in a surface stockpile to today 7.4 billion pounds of copper, which was released just in the last 3 weeks with a mineral resource estimate update. You'll also see as we go through the presentation there's huge opportunity for continued exploration success, and we will be announcing additional results from the Newton column test towards the end of the year, and of course that's pure optionality on the current story. We also have a management team here that has a proven track record of delivering exceptional results for the shareholders of the company, and we don't believe that that will change with Arizona Sonoran. A little bit on the share capital structure, so 109 million shares issued. The options and warrants are not in the money. Those are priced in and around $2.45, which was the IPO price approximately 2 years ago. Currently trading at $1.45, giving the company a market cap of about 150 million Canadian dollars. We have no debt. You'll see there as well, Rio Tinto is approximately a 7.5% shareholder, and they did follow their investment earlier this year with the exercising of their preemptive rights. Tembo Capital continues to be our largest shareholder and support all of our financings, although in the last couple of years they continued to see themselves diluted down. Currently 11 analysts covering the company. The 12-month target price is around $3.40 Canadian. As far as the management team is concerned, you've got 180 years of experience here. The bulk of the team is actually located either in Casa Grande or Tempe, which is a suburb of the Phoenix district. We recently added Bernie Lawyer to the team in the second quarter of this year. Bernie's a 40-year veteran from the Arizona University School of Mining. He recently came to us from the Sol Gold project with Casabel. Spent many years at Escondida with BHP, which as we all know is the largest copper mine in the world. And he was instrumental with Torex in getting some of their projects into production in the last 10 years. So we're delighted to have Bernie join the team, and he lives and resides right in Casa Grande, which is immediately adjacent to where the mine is located. A little bit about the infrastructure. Obviously we benefit from world-class infrastructure. We've got the Union Pacific Rail line immediately on our southern doorstep. We've got Interstate 10 miles to the northeast. The Maricopa-Casa Grande Highway is on our southern border. The main power line runs right through the site. And there's a nuclear reactor in Arizona, about 100 miles west of Phoenix. So we've also got the ability to draw 100% green energy from that line once we go into production. And there you can see a photograph of the historical rail line running right into the site. Obviously when ASARCO had this back in the 70s and 80s, they were shipping out a copper concentrate. So we benefit from a rail line as well. As far as the permits are concerned, remember we're all on private land, so there's no federal nexus here. We're only dealing with the state and the local municipality. When we apply for a permit, once the application is administratively accepted, within 6 months the regulator must give us a response to our permit. The longest we've had to wait for any permit is 5 months, which was for an amendment to the Aquifer Protection Permit. The Cactus project today, as per the PEA 2 years ago, is actually fully permitted. So that would be the surface stockpile, Cactus West open pit, and Cactus East underground deposit. What is not permitted is Park Salyer, which is going to be included in this pre-feasibility study. So with the pre-feasibility study coming out early next year, our intention is to apply for an amendment to the permits. We would anticipate that by the third or fourth quarter of next year, we would have those permits in place. And upon the completion of the PFS, we'll immediately go into bankable feasibility study. So by the time we announce the bankable feasibility study at the end of 2024, we have the permits in place. Assuming we can organize project financing immediately following the bankable feasibility study, we anticipate an 18 to 24-month construction and development period. So we potentially could see first production coming out of this asset sometime before the end of 2026. And of course, we all know these are tough markets at this juncture in time, but if you look at most of the forecasts going forward for supply and demand with respect to copper, we're seeing significant demand from 2026 and beyond, and we believe that there will be significant constraints on the supply side. So we think our timing on bringing this one into production is actually going to be quite good. I'm just trying to go back. Can we go back? Can we go back? So stay on this slide. So the mineral resource estimate that we put out several weeks ago, the key number to look at here is the total measured and indicated leachable copper, which is currently sitting at 4.4 billion pounds of copper at a 0.6% copper. If we take out the surface stockpile in Cactus West, the underground assets are running at over 1% copper. So in the pre-feasibility study, we are trying to target 50,000 tons of cathode production a year, which is 100 million pounds, and at least a 25-year mine life. Obviously, if you multiply those two numbers, you would end up with 2.5 billion pounds of copper being produced here as cathode over 25 years. Given we have 4.4 billion pounds of leachable material in M&I, the likelihood of achieving that production profile in this PFS is highly likely. You'll also notice that there's 1.3 billion pounds at almost the same grade of inferred leachable material, which cannot be included in the pre-feasibility study, given it's not in the measured or indicated resource. But certainly if you converted 50% of that into M&I, you're easily looking at another 6 to 7 years of production over and above what's probably going to be a 25-year plus mine life. So we're looking here at the top 10 developers in the US today with 7.5 billion pounds of copper in the ground in all mineralized forms and at 0.6% grade. You can see there that I think we rank number 6 currently in the top 10. As I said earlier, if you take out the open pit and Cactus West, the stockpile, the grades are over 1%. Which fits in nicely with Santa Cruz and the Ivanhoe Electric deposit, which is immediately next door and is essentially the down plunge extension of the same mineralized system. If you ever got to a stage here where you rolled up the entire district, I think in the next couple of years you'd be looking at 20 billion pounds of copper in the ground, all on private land with access to water. So we did put a PEA out, as we said, several years ago. I think this is what the company is currently being valued on. The average annual production was 56 million pounds of copper over an 18-year mine life. As I said, with the pre-feasibility study, we're expecting those numbers to grow to 100 million pounds of average annual copper production and a mine life in excess of 25 years. We're also very cognizant of the capital. And obviously we want to try and have a capital number in there that would allow the company to move forward with the project on a standalone basis and not be dependent upon a JV or some form of partnership. These are the top 10 independent ore mines actually in the US today. So at 100 million pounds of copper production annually, it would bring us in and around number 7 or 8 currently on this list. We expect our C1 cash cost to be around $2 US a pound, which is sort of in line with where our peers are. And with 2.5 years of metallurgical testing, we're seeing recoveries anywhere from the mid 70% up to 90% on the oxide materials. So recoveries of 80 to 85 are probably what we'll see, which again is in line with the current top 10 producers in the US. Most of them obviously are in Arizona. Exploration potential. Well, I think Park Salyer heading south onto Mainspring. So in the last year we acquired Mainspring. We have an option on that property. We just announced that we're currently drilling there today. By the end of the year we will have drilled 10 holes into the deposit. We also have access to historical holes which were drilled by ASARCO. This will not go into the pre-feasibility study in the mine plan or the financial and economic model, because at best it will only be an inferred resource. However, we are seeing mineralization moving south, and what's interesting, if you look at Park Salyer in the long section at the bottom of this slide, as we move to the south, the mineralization is extending to surface. We're not seeing grades of over 1%, the grade is diminishing, but we are seeing the mineralization move to surface. So I think part of our budgets for next year will be to drill out Mainspring, bring it into at least an indicated category, maybe even some into the measured, and see if we can incorporate that into a bankable feasibility study at the end of 2024. Obviously, if mineralization is coming within 150 feet of surface, there's an opportunity here down the line for a starter open pit on Mainspring, which would cut out significant capital development into Park Salyer, which is going to be an underground mine in the pre-feasibility study. So if you see robust numbers coming out in this PFS, you can expect even better numbers by the end of 2024 in a bankable feasibility study. We also know that the 1 kilometre of strike length between Park Salyer and Cactus West, known as the Gap Zone, is completely open. We've drilled 3 holes there and are waiting on the assays coming back. And we also drilled a hole 1 kilometre to the northeast from Cactus East, known as the Northeast Extension. We were looking for a historical hole that went through some 47 feet of 3.5% copper that ASARCO drilled. We didn't see that, but we did see 997 feet of continuous mineralization at around about 0.4%. So a little bit on peer review. Here on the slide you can see our numbers on the left, and we've matched ourselves up against what we would consider our immediate peers. I think as far as the resource is concerned now, you can see that we've grown the resource to a substantial level where it's actually larger than most of our peer groups. I would certainly say Arizona is probably one of the safest jurisdictions when compared to some others. And certainly, you know, if you're thinking now about the pre-feasibility giving us a 25-year mine life and growing the production to 100 million pounds of copper production with a lot of organic growth potential, I think when you see this slide updated in the first quarter of next year when the PFS, I think you're going to come away with the belief that this company is significantly undervalued when compared to our peers. So just to finalize and wrap up, I mean, obviously it's a tier 1 jurisdiction, heap leach SXEW plant. It's going to be very low capital intensity. We are on private land. We're only dealing with the state and local municipality, so no federal nexus. The permitting on this one is relatively straightforward and de-risked. We've grown the project significantly in the last 3 years, and we expect the resources and reserves to grow substantially in the next couple of years. You've got a management team here with a proven track record, and we've got a very strong social license from the local community, and obviously we take our responsibility with the ESG extremely seriously. So that concludes the formal part of the presentation. I've got 5 minutes left, and I'm happy to take any questions.